In today's discussion, we are going to have a deep dive into everything management system. Today, we are talking with Vern Davenport, who is a partner at QHP Capital, the author, creator, the brains behind the management system. And we also are joined by Michael Curry, who is a successful search funder, bought and acquired and grew a healthcare services company, and is now looking at the next chapter with your co-founder and co-searcher, and figuring out how do you create just the next stage of an investment firm. And Vern, you guys have been around for a while and you have created a successful firm. So the point of this is to do a deep dive in how do you transition from being a successful searcher to building a successful private equity firm using the management system for the firm and applying the management system with the portfolio companies.
Jordan, thanks for having me. And Vern, thanks for being open to have this conversation. Really a big fan of what you guys do. And I'm really excited to learn more. So I feel like I'm the student and I have a little notepad to jot down. But really quickly about my background and me and my partner. So our company, Lullwater Company, myself and my partner, Keith Burns, are the principals of the firm. Keith and I have known each other for over 25 years. We went to undergrad together at Emory University, and we formalized our business partnership in 2012 when we decided to do a search fund together. When I graduated from University of Chicago in 2013, we formed our search fund, Seneca Creek Partners. We found a outsourced healthcare services business called Kruger Gilbert Health Physics in the greater Baltimore area, which is where we currently reside. Bought the business in 2014, ran the business for 3 years without any system whatsoever. And a friend of ours jokingly says that was the period where we ran the business by putting out fires with our face. We were, we were, so we made a lot of progress, but man, was that painful. We were introduced to the EOS system, ran the EOS system for 2 years with our search fund investors. We really saw an opportunity to take what we built in the greater Baltimore area and saw an opportunity to expand geographically through M&A. We needed the right partner with the right balance sheet to help us move more quickly. And so we partnered in 2019 with Blue Sea Capital, who's still our partner to this day, with Kruger Gilbert, which is now One Physics. Keith and I ran the One Physics business for 4.5 years with Blue Sea, and looked up and had a very sincere and open conversation with one another and with our partner Blue Sea, and kind of said to ourselves, we really got into this small to medium sized business, entrepreneurship through acquisition world, really to work with smaller companies and help them make it through that inflection curve, professionalize themselves, and really put themselves in a position for growth. We feel very strongly that we got One Physics to a place where it will be and continue to be a market leader and successful business, but that it was time for us to kind of regroup and go back to our roots. And so last year we formed Lullwater and Company, and spent a 2-day session with another friend of yours, Jordan, Dan Crimmins, really crystallizing what Lullwater wanted to be when we grew up. And one of the things that we really honed in on, which led us to the management system, was we wanted to put ourselves back in our shoes in 2014 when we bought the business, and in 2019 when we partnered with a private equity firm. And we just had a very honest post-mortem of, what would we have liked to have had in place to hit the ground running and really build alignment on what we wanted to build with the business, and have alignment and accountability with our partner to really hit the ground running. And through that process of research was introduced to the management system. And they say that sometimes when you're ready, the right kind of mentor or coach will arrive. And it just so happened that we were spending a lot of time thinking about how can we make this process of developing a value creation plan and working with the teams that we would be inheriting in the companies that we bought, and making that system and that plan stick, and making sure that the team, particularly the management team that we were going to be working alongside to execute this, big, hairy, audacious goal, had a seat at the table, felt like they were heard, and had a chance to, for lack of a better term, speak or forever hold their peace before we all stacked hands and went to go execute on our value creation plan. And when I read Vern's book, it was really like a light bulb went off in my head. And I said, these are some of the elements that at Lullwater we would have, as operators, appreciated, saw a lot of value in, would have loved to have had some of those sessions with our investors, but also with our team members to get more clarity on the front end. And also the tools, once you implement the management system, to simplify accountability and to give everybody a line of sight into what the heck it is we're doing. So
Yep.
that's kind of how we were introduced to the management system.
Vern, can you give a snapshot about QHP? What is the management system, your background, and how that led to creating the management system, and then the book, Accelerating Growth?
QHP Capital is a growth equity firm located here in Raleigh. We're focused in healthcare, primarily in life sciences, services, and technology companies. We're a control investor that takes execution risk. And when we formed the firm, part of the strategy was to be more operationally involved, which was my attractiveness to the firm and the firm's attractiveness to me. But we really didn't know what that meant. We knew we were going to be operationally involved, so we need somebody that was in operations. So that's how it started. And the management system surfaced because I had built it out of necessity in my background. I got my first real CEO opportunity back in Raleigh for a company called Mises Healthcare that was a great company, but had fundamentally lost its way. And I tell the story in the book of coming into Mises, about $850 million company in a variety of businesses. And I had a great CFO who had been there a long time, knew where all the bodies were buried, so to speak. And it gave me an opportunity to kind of run around the company to get to know the company. I come back into my office area, in the first 3 or 4 weeks, and there are 12 or 13 white 3-ring binders. They weren't even stacked or organized on my conference table. They were fundamentally dumped. And I asked my assistant what they were, and she goes, those are your monthly board books. I go, what is a monthly board book? Well, it's the report out of all the business units here in the company. And that's great. So I picked one up, and it's 75-page narrative. I picked the next one up. It's a bunch of spreadsheets and charts. And I picked the next one up, and it's a combination of the two. And it's like, I can't even read or consume these things in a month. And I have a management meeting the next week, and I tell my management team, hey, I don't need those. I can't use those. I'm not going to read those. You don't need to produce them for me. And then a month passes, and there are a bunch of board books popped on my conference table. And I bring all my management team together and inform them that I'll terminate any of them that produce another one of those for me, because the company wasn't performing well. It was consuming a lot of resources producing these reports, and it wasn't taking any actions on what was happening in the business. And I had recently read a book by Pascal Dennis entitled "Getting the Right Things Done," and boy, for me, that just like you were saying, Michael, it kind of lit something up inside of me about that's really what we're here to do is to get the right things done. But how do we determine what the right things are? So I asked at that time if we had any Six Sigma expertise in the business. There was one guy, his name was Axel Granholm. I had not met him. I asked Axel to come to my office. He didn't know what he was getting into. I gave him a copy of that book. I said, read that book, come back to my office, and we're going to build a management system so that we can run this business in the nanosecond. And that was really the birthing of the management system. So now come back into QHP Capital. We started the firm in 2017. What we're seeing now is a lot of sharing of best practices and experiences across the totality of our portfolio, because of their common use of the framework and their successes and failures with the framework. But I believe that the intent of the management system and the deployment of the management system for those that successfully implement it and have real discipline around it are creating differentiated performance results. Our strategy is, again, to catch companies at that inflection point, these founders, these families, these entrepreneurs. They've got great businesses. Those businesses are growing and they need capital. And they see, like we see, a tremendous business opportunity. What we're trying to invest behind is our ability to partner with them and mitigate that execution risk and create the infrastructure to enable that company to scale. And Mike, you said something I thought was really important about how you guys look at companies and your expectation that discipline equals freedom. The term that I would use is the management system is liberating. It's a lot of work, but if you're focused on the right work and you're focused on the right metrics, therefore you're not doing wrong work and you're not confused about the priorities and you're not chasing a whole bunch of metrics, you're getting the right stuff done at the right time. The management system is absolutely liberating to that executive team so that they and their organizations are focused on the right work. Another tenet of the management system is transparency. Everybody in the company knows if there's cash in the bank and if there's a backlog of revenue opportunities or if there isn't, so that we can leverage all the experience and expertise and judgment and the alignment of work of that management team to go focus on the right things.
Vern, can you talk about what are the different tools in the toolbox of the management system? And when Michael and his co-founder, Keith, acquire that first business, if they're implementing the management system, where does that journey start?
Maybe walk us through that meeting with the founder that says, I recognize your system is better than what I have. You guys ink the deal, and then what's happening in that first week?
Yeah.
And then what's happening coming out of that first week?
Yeah. Okay. So there's two things that are really important, and that is the buy-in of the CEO, which may or may not be that founder, but whomever the CEO is, it starts at the top. So that CEO has got to be committed to and ensure that the management team is going to be committed to the management system framework. It's going to be theirs, but there are some elements of discipline that are required for it to be successfully deployed. If Portco says, I'm doing this reporting of the management system to QHP, I guarantee you it will be a failure and the company will struggle to be successful. They have to embrace it and make it their own. So it starts with the CEO. The second thing that is important, I think, to recognize is that the secret sauce to every great company is a aligned and engaged middle management team. The founders can't make every decision. The CEO can't make every decision. And for a company to be successful, you're going to have a team of executives that are reporting to that CEO who are going to be responsible for every decision of consequence. So what you're really trying to do is trying to empower that middle management team to own the business and to be clear about what they bring to the table and how they're going to work together to maximize not only their experience and expertise and capability, but that collectively of that management team. So what we're trying to do in that offsite is to bring that group of people together and have them feel like they're a part of everything that is the company, from mission, vision, values to how the work's going to get done, to where the work's going to get done, what the important metrics are, and how they're all going to work together so that they own and therefore have a responsibility to take that out into the rest of the company.
Maybe the founder-led businesses you work with have been different than mine, but you have a lot of typically founder-led businesses that are command and control, where there's not even I was going to say a big decision, but there's probably not even a medium-sized decision that gets made without he or she kind of being all in the business. Can you talk a little bit about kind of that shift and what needs to happen with the CEO?
Great companies aren't ones that optimize the decision-making up and down an organizational stack. Great companies are the ones that optimize decision-making across the process of getting the work done. So that means that you have to drive that accountability and that decision-making into the organization, and decisions therefore are made much closer to the customer and where the work's being done, as opposed to up and down a stack of organization, right? So that's what we're trying to teach and provide a framework for. And when you have companies that are successful in the management system and are operating that way, it's wonderful to sit in an operating committee meeting and listen to the type of discussions that management team has about the business and the decisions that they make and when they make them. They're making them right there and they're operationalize them, as opposed to a PowerPoint that results in another meeting, which results in another meeting. And by the time you get to a decision, the world's changed and you haven't had any impact, right? So the components of the management system and the components of the offsite, and I'll step through all of them and maybe just a little bit of context, and then we can talk about any of them that we want to talk about. But the purpose of this is to empower that middle management team, to leverage the expertise of that middle management team. So, and to do that, we want them to be brought into everything that there is about the company. Nothing's going to be concentrated in the founder or in the founder and their friends. It's going to be concentrated at this management team, because this management team is going to make every decision of consequence, good ones and bad ones, but every decision of consequence on the journey from where they are today to where they want to be. So we always start with that from to chart. Here's where we are today. And 5 years from now, here's what we'd like to look like, right? And the purpose of that is to show that management team, those 10, 15, 20 people who are sitting in that room, that what got them to where they are today isn't going to get them to where we think we can get the company to, but they want to be a part of that journey. Financially, operationally, professionally, want to be part of that journey. So this is about the aha moment, which is, boy, we did a lot of work to get to here. We're very successful. But if we're going to do that in 5 years, we're going to have to invest in different areas. We've got to bring different expertise in. We're going to have to work in a different way. So that's a really important moment. And the CEO owns that moment, right? This is why we're here in this meeting. This is where we are as a company. This is where we want to go as a company. This is why we picked QHP to be our partner, and we're on this journey together. So that's kind of the first part. We get that out of the way. But that's a very important moment. The second thing that we do is we ask them to do a mission, vision, values, behaviors work. And I will tell you, COVID taught us a lot of lessons about how important people are to our business, to recruit them and retain them, and what's important along that journey. And culture is so critical today. So back in the old days when I was doing this, I would do the mission, vision, values, and here it is as a CEO. No. Everybody, particularly at this management team level, has to own that, particularly the values piece, because holding people accountable to the behaviors that are going to result in the culture that the company is going to be perceived by is critically important. And it's important that everybody in that room own that. The vision, the mission, the values, and the 2 or 3 behaviors that are going to be examples of how those behaviors are going to deliver on those values. And that may take 3 or 4 or 5 hours over a 5-day week to kind of land that. But when this management team leaves, they own that. Everybody's participated in that. They've owned every word and they've owned how it's resulted, right? So that's an important piece of work. Then, because this is a management team, this management team needs to assess their strengths in today's market, their weaknesses in today's market, their opportunities in today's market, their threats in today's market, because this management team has to deal with those. So this is raising those managers from being kind of doers to, you are a manager. You need to understand as an executive of this business what's happening in the business and what our positioning is and what we're going to do about those things. So we spend time on SWOT, and we limit it to top 5 strengths, top 5 weaknesses, top 5 opportunities, top 5 threats. And we actually now go into a little road mapping for each of those to say, okay, over the next 5 years from 2, how are we going to capitalize on our strengths? How are we going to capitalize on our weaknesses? How are we going to capitalize on our opportunities? How are we going to mitigate our threats? And what are the big items along this journey over the next 5 years that we as a management team need to make sure that we're making progress on? So we do that. Now we move into the management system. So we show them the 5-year plan of revenue and EBITDA that we have to have the company achieve if we're going to produce a return for our LPs. And now we need to operationalize the resources of the firm against how we're going to execute against that opportunity. So we start with something that we call a functional construct, which is how is the work of the company going to be done? And the work is broken down into three big categories. What functions are enablement functions of the company? What functions are execution functions of the company? And what functions are required to support the enablement and execution part of the company? Typically, companies, the enablement functions have sat in the head of the CEO and the founder, right? And maybe some of the execution functions. But the work of strategy and product planning or product management and manufacturing and marketing are things that if you're going to scale, you got to put some maturity into. And these are investments that need to be made. And those plans now need to be executed with intentionality. And those are the execution parts of the business: sales and implementation and consulting and support, those things that are touching customers. And then there are functions that support the enablement and execution part: human resources and IT and facilities and legal and finance and those sorts of things. The work of the company is linear. There's something that is done, and then when it's done, there's something else that's done. And when that's done, something else is done. And when that's done, something else is done. And what we're trying to do is operationalize the most effective way to get that work done, the fastest, most efficient way that we can. So the company, this management team, defines how the work is done in a functional construct of what are the major functions of our company and how do we want to get our work done. And for the most part, all the companies are 75% the same and 25% different. There's something unique about each company, but they define that. Now the fun begins, which is up until this point in time, the company, people that have been in the company have worn whatever hats needed at whatever moment it was needed to wear that hat. And sometimes they wear three hats at the same time, right? I'm in sales and I'm in IT and I'm in whatever. I'm in science and I'm in, so I'm wearing whatever, and it's the priority of the week. Student body right this week and student body right next week. You can't scale a company that way. So everybody's cheese is going to get moved in the next section, which is if this is the function, the first thing we need to define is what work is done in that function. Not something's done all over the company. What work are we going to hold that function accountable for? And the rules of the road here are, if it's important to be done, it has to land on a role and responsibility sheet, not on two and not on none. So we have to define what work is done where. So we do that for all these functions. So what work is in product management, and what work is in marketing, and what work is in sales, and what work is in implementations, what work is in support, what work is in finance. So we all collectively are saying the responsibilities of the function are these things. And it's very important that we reach agreement, because you're going to wear a singular hat in this organization, not multiple hats. You can't scale the company if you're running all over the place on the priority of the week. We have to assign the right amount of talent with the right skill set in the area to do the specific work. Then we reach agreement on that. Everybody's cheese is getting moved all over the place. By the way, we're not talking about structure at all here. We never talk about structure in this week. The company then goes after this week and applies their structure to how this work gets done, or their resources or talent gets work get done. We're describing the work.
Vern, I have a couple of questions to clarify.
Sure. Yeah.
Where does True North play into this? And maybe I might have missed it as you described it, but where does True North play into it, and what is True North?
Yeah, so I kind of glossed over that. So when we're doing when we do that 5-year plan, when we do the from to, and we show the financials, what our expectation for the business is, what we got sold, that revenue and that EBITDA number that we got sold and we bought becomes the annual True North. Everybody's organized on how we achieve that revenue and EBITDA number. So for any operational year, everybody who's on variable comp is paid on True North, which is that revenue and EBITDA number. The only thing that doesn't change in the management system in the context of a year is True North. Anything else can change whenever it needs to be changed. The functional construct, where work is done, the metrics. All we're talking about doing is how do we take the limited resources that we have and ensure we have that prioritized against the most important work that's required for us to make our annual revenue and EBITDA number, for which we call True North. So that's where that comes from. And I kind of glanced over that. We build that functional construct, and then we build these roles and responsibility sheets, which are the work on the specific sheet. What are the dependencies that work has on others? And are we clear about what that is? What's the accountability of that work once it's done? Who does that get handed off to? And what decision rights that function can make without having to go to any other place in the organization. So what ends up happening after a couple of days of really hard work is the company has decided this is how the work's going to get done across enablement, execution, and supporting functions. What work is done where? What work has to be done so I can do my work? What am I accountable to produce as a result of doing my work? And what decision rights does that function have without having to go anywhere else in the organization? So we create this linearity of how the work in this organization is done, right? Once we get that done, the most important thing is how we're going to measure that work. And for me, I hated PowerPoint discussions. I had a lot of people in organizations who were very good at sitting in a conference room and describing through 20 or 30 or 40 PowerPoint charts their perspective about something. But it never resulted in anything getting accomplished other than wasting an hour of listening to and whatever time it took for them to prepare the PowerPoint. I, as a CEO, wanted to sit in the back of the room and not read 12 binders, but see 12 metrics or 10 metrics or 6 metrics or 2 metrics that really mattered and how we're doing against it. So we built this concept called a tracking sheet. So each of these functions that we've created, now we need to know how we're going to measure how they're doing against the work that they need to do so that we can make this revenue and EBITDA number for the year True North. So a tracking sheet has 10 or less, not 11, 10 or less of the most important metrics that function has to perform this year to create or to provide their contribution along the journey to make True North. Those metrics are primarily made of financial metrics and operational metrics. So for each of those financial and operational metrics, and every month of the year, there's a number. So if you've got an operating expense budget in your marketing department, every month you got an operating expense budget. If you're to create 12 marketing generated leads every month, there's a 12. And every month you will then show your progress against or your performance against those metrics, and you either make that number or you don't make that number. You're either red or you're green. There's no yellow. There's no we don't need the discussion about why you almost did or what. No, you either did or you didn't. Now we can contextualize that red to go, is that significantly important? Somebody paid us on the first day of the month as opposed to last day of the month, and we missed our AR number. I don't have a problem there. Just something happened. We need to make sure that we're dealing with that. But I don't want to go spend 3 days reviewing why we didn't make our AR number. It came in on the first day of the month. So we need to contextualize that red, but you're red, right? We didn't make it. We thought we were going to make it. So those 10 or less metrics for every single month, I can look at from the back of the room. And if it's all green, then that function's on plan. We don't need to spend time on it. Get back to work, do your thing. If it's red, then we can focus on what are the most important reds and then spend our energy trying to remediate or make adjustments associated with that. And I'll give you
Vern, I think then that transitions to the A3s. But before we kind of go through the rest of this, can we rewind and just kind of recap the flow here? So the journey starts with from to chart. Then we go into your vision, mission, purpose, values, behaviors. Right. Then the SWOT analysis, top 5 for each category.
Yep.
Then True North. And that is a revenue, that is a financial True North. It is not, we're going to Mars, wishy-washy, mission, vision, very different.
Revenue.
Then we go into the functional construct. That functional construct leads to the tracking sheets, which then leads to the next discussion point with the A3s.
So can you talk a little bit about kind of how everybody calibrates around a True North that we think it's not an easy putt, but this is doable. And then the second part of the question is, how does that also translate to the tracking sheet, and kind of how do we sync up and stress test using your analogy of kind of the 12 marketing qualified leads? How do we make sure that those tracking sheet metrics sync up in a logical way that says,
Yeah.
you're one of my true north. These
Yep.
are metrics that, if executed, give me a puncher's chance to hit.
Yep.
You're one of my true north.
Those are great questions. And the fundamental point that you're making, which I think is really, really important, is that there's believability by that management team that they, through hard work, can achieve that number. It's not something that's unachievable and they can't see a path to it, right? So I think that's really important, where the company, you're getting investment because we think we're really good. There's a real opportunity here. And I would say in that first meeting, everybody's they're not dazed and confused by it, but they've never experienced and had, there's never been a credible journey that they've been on between where they are today and an accelerated growth result, right? So there's going to have to be a little trust in that first part, but the way we try to mitigate that is by showing the enormous market opportunity that we have together, right? So there's a great market opportunity, which is why we're investing and why they chose a private equity partner to help them realize their full potential. And now we're at the very beginning of doing that journey together. So for us, the way there's some believability is by the enormity of the market, the fact that they've attracted a partner, and now we all get to sit together and figure out how we're going to execute against this growth number in the first year. So there's I would say in year one, there's enthusiasm from everyone. They're excited about having capital and that they've got a partner. And now we're coming together to go figure out together how we're going to align ourselves and now start to execute against that. The second part of the question is the whole tracking sheet effort is about putting on paper the operational plan that's required to achieve that number. And that's a really important exercise. It's the most important metrics that are required, but it's then expressing those metrics in an operational plan through the 12 months that will result in execution against that number. And I'll give you a couple of examples. If you're coming out with a new product and we're expecting that new product to produce a significant amount of revenue, then what's the plan for that new product and what does the execution organization have to do to get ready for that? So as an example, let's assume that we have to produce this product or we're going to release this product to the marketplace in May. And we're expecting a new sales team to be hired to go sell into that segment. Let's say it's in Europe. And we're expecting that new product in May and that sales team in May to go sell 50 million of bookings to produce 20 million of revenue. Well, there's a lot of operational dependencies that have to happen ahead of those milestone dates to be able to do that. So what are those things? Well, I got to hit these development milestones to get that product released. I need to start doing some marketing conditioning of the marketplace prior to the release so the market's ready. I need marketing qualified leads. I need to go hire a sales team in Europe. I need to train them on our products. I need to create contracts to do it. I got to be able to deliver all those things. So if the product team delivers the product in May, that's great. But if we haven't hired the sales team and trained them, then we've got a gap. So there's a dependency on HR to hire people. There's a dependency on training to train the people. There's a dependency on legal to create the legal contracts, dependency on marketing to ready to market. Then there's sales who has to go engage those prospects and progress those prospects and close those deals. And then there's a dependency on the implementation team to implement. And all those things have a cycle time if we're going to produce 20 million of incremental revenue from a result of doing it. All that needs to be expressed on a tracking sheet to know that each of those things that have to happen before are happening so that if I'm in sales, my dependency on HR to help me hire, we're in complete sync. I get the people I need in sales when I need them to go develop the pipeline, develop the relationships, and all the other things. So you want to see those expressed on the tracking sheet measures so that we know whether we are or are not on our plan on our journey to our revenue and EBITDA. So this management team is going to sit together during this offsite week and determine what those most important metrics are. Now, marketing can have 350 metrics that are important to them, and that's fine. But when we get together as a management team, they better be performing against the top 10 or less that we all said were the most important for marketing. And in my experience, and I got a lot of gray hair here, in my experience, if you pick the right most important metrics, financial and operational, and you progress successfully against those, you can't help but blow through your revenue and EBITDA number. And when you don't, either because you didn't pick the right metrics or you haven't performed against those metrics, you're challenged to make your revenue and EBITDA number. So the point of the offsite is to align the work, to pick the most important metrics for each of those tracking sheets. So each function has a tracking sheet, and there are 10 or less metrics on that tracking sheet. And then they go and operationalize the metrics on those tracking sheets to what's required to make the revenue and EBITDA number. And then Jordan brought up the last most important aspect of the management system, which is if you've got customers and you have employees, it is not going to go according to your plan. It never goes according to your plan. Best example I can give you is we did a bunch of planning in 2019. In 2020, COVID hit. Those plans no longer mattered. So we had to retool every company in 2020 because nothing went according to plan. But when it doesn't go according to plan, what's important is you know that as soon as it possibly presents itself, and you're progressing work against how to remediate that. And in this management system world, we have another tool called an A3, which is a single sheet of paper. It's not a 50-page PowerPoint. On that single sheet of paper are the following elements: the metric that's not on plan, the gap of what's required from where it is today for it to be on plan, any relevant background that's required to explain why we're not on plan, the root cause, the most important thing, the root cause. I'll give you an example of that. But what is the root cause is why we're not on plan. Those are all left-hand side of the page items. On the right-hand side of the page is the action plan to address that root cause and close that gap. The action, the owner, the date. And then there's a section, if you need resources in that action plan that you as a function don't have control over, what are those resources and do you have them or not? On that one piece of paper, we now have a common language: the metric, the gap, the background, the root cause, the action plan. I don't have to filter through your 50-page PowerPoint. I now have a tool set for which I can go sit down with anyone and understand if we're on track or not on that plan. And as soon as I get that metric, that root cause address, and that metric back to green, I declare victory on that A3, that piece of paper, put it in the file cabinet, and move on. And as soon as you know as a functional owner that that metric is turning red, you start working on your plan. You don't have to have a meeting to do it. You start working on that plan and start actioning that plan so that as soon as that problem or that challenge presents itself, you're now actioning efforts to get that most important metric back on plan. And if you think about that, the dynamic of that A3 mentality or that tool, this is opposed to going to a meeting and go, I got a bunch of reds. Now let me go figure out what I'm going to do about it. A month passes. Another set of data presents itself. I've done all this work and it doesn't matter anymore. I want everybody to be doing a job in the organization that they love, that they feel like they can make a major contribution to, that their contribution is transparent and seen throughout the organization. It's not politicized or functionalized or pontificated upon. It's a fact. You're either getting the job done or you're not getting the job done, right? There's transparency, you've got accountability, and you're aligned with people that are like-minded and know their job. I know I got a dependency that I have an accountability for something that you have a dependency on, and I'm working my tail off because I know you are as well to do your job. And the result of all of that is that aligned and engaged management team. And you cannot scale a company if your enablement functions are performing, but your execution functions are not. Everybody's got to be tethered together, and you can only scale a company if they're all kind of tethered together and scaling together. If not, you're always going to be out of sync. So it's all about, this management system for me was all about taking the politics and the dysfunction out of an organization and being able to hire very talented people who are doing what they loved with people that they love in an organization that had tremendous growth opportunity. And all we have to do is execute against that opportunity and we can be immensely successful. So at the end of the day, this management system is nothing but a bunch of fundamental concepts aligned in a way. And I think our secret sauce as a private equity firm is we forced the team off site for a week to get it all done. If we didn't do that, they would never get this all done because the work of the company gets in the way. but they leave this week with alignment, the focus of the tracking sheets, a common methodology of how to solve problems, an operational plan for how they execute the year. And now they can go do work, and they're liberated from reporting to focusing on what they love to do, which is the work that they want to do at the company that they want to do it at. And that's the management system.
Can you talk a little bit about when the opposite occurs? So we've talked about when people get it, it clicks. You have that middle manager that sees the transparency as an opportunity. And again, you guys have maybe found different companies, but what we found, or what I found in my experience, is in some cases that light of accountability, some folks don't want that. And how does that process internally, or what have you seen where people may rah-rah at the weekly meeting, but then they get a couple of those monthly operational reviews, and it's like, wait a minute, you actually are holding me accountable to my 10 functional metrics, and people are asking questions, and I can't just go, hey, I'm in the head of marketing, don't worry about it, I've got it under control. You worry about finance. How does it, when it doesn't click, or you find somebody that's resistant to that accountability? Can you talk a little bit about that process?
Yeah, it's such a great question, and I do think there are two categories of executives, right? And I've experienced that a lot, and I think what the management system does, because of its transparency, it reveals that quickly. And candidly, the right answer to that is those people who can't perform in this transparent, highly accountable, highly collaborative environment need to find a different place to work where they're more aligned to the culture of that company, because they're not going to be successful here. And I will say, what happens as you march down the path of execution is that management team, if there's a functional leader that's being challenged in making their metrics, but they're doing everything humanly possible to be successful in achieving those metrics, they're going to get a lot of help from their peer group, right? Because it's important those metrics get made. So if there's help to be given, they're going to give it, and support and whatever, right? Resources, whatever. If that person's not doing the job and not making the metrics, that management team's going to drive them out, because that person becomes an impediment to the organization. And that will happen a lot sooner than the CEO having to get engaged and HR having to get engaged, et cetera. That management team is going to drive them out, because that individual, or by not performing, not living, not breathing, not committing to the management system, not getting the work done, not executing against the operational and financial objectives, is going to get in the way of everybody being successful, and that everybody is going to drive them out of the organization. What I love about the management team is I think it reveals that of the management team very quickly, those that can and those who don't. And it's all about people. I mean, at the end of the day, it's all about people. I tell our CEOs, your job is twofold: it's people and it's strategy. And you can't work on strategy until you get the right people. And your job is to get them and to coach them and to empower them and to support them. And when you get to a point where they're able to operate autonomously across this team, we liberate that CEO into doing what they're best at and where they bring the most leverage, which is the strategy aspects of the company, not the operational aspects of the company. So it's all about people and strategy, and you got to get the right people in. And the management system, because of its transparency and the clarity of accountability, reveals very quickly those that can perform in this environment and those that don't. Doesn't say in any shape or form those people who don't are bad people. This is just not the right environment for them. And we need to find out.
What you said the job of the CEO is people and strategy. What kind of begs the question, what do they think their job is? Or maybe they've just been so busy doing that they haven't really paused to reflect what is their job at the next stage.
I think it's more the latter. They've been so busy wearing every hat whenever that hat needs to be worn, that their transformation, their personal transformation, is into how do I take all that I know and inject it into this management team so that I can trust that they'll do it and they have the capability of doing it. And again, I think that's one of the advantages of the management system is we provide that individual a framework to transition all of what they've been doing and all of what they know into a management framework where people can be accountable for that. And this founder, the CEO, can have an ability to ensure that those things are being done and therefore build that trust between the management team and that founder CEO. It's not that I can just throw it over the transom. I am enabling them, but I'm enabling them through a role and responsibility sheet where we're clear about what work is being done there, and a tracking sheet. We're clear how we're going to measure. And I'm looking at January results in early February, and I have a sense as to whether it's happening or not. And then there's March, and then there's April, et cetera, right? So we've got a tool set that will enable that transition for that CEO. But if that CEO is still diving into and making operational decisions in a function, they're not empowering that functional leader. So this framework, this tool set enables that transition to happen, and it has to happen. Some CEOs can't make that transformation, and therefore they're kind of deciding this doesn't work for them, right? Understanding what not to work on is probably more important than what to work on, because you can't do everything, and you've got to decide what it is that you are going to do, which means there's a lot of stuff that you're not going to do. But Michael, I think your point is really good, and that is it. And I think this applies to small companies and big companies. When we have a big company, we're taking 20 people out of the company for a week, right? So the top 20 executives of this company for a week, the founder and all these people, is equally as disruptive and exposing the performance of the company as it would be for a small company. But the point is, if you don't do that, what you are going to be doing is things that you shouldn't be doing. There's going to be overlap of things being done. There's going to be a lot of dysfunction that's created. You certainly aren't performing at the optimal level. And whether that is you take a week Monday through Friday, or you take a week Friday through Sunday, or whatever the case may be. Hey, when we first did this at MISIS, it's like 18-hour days. I mean, we were grinding until 11 or 12 or 1 o'clock at night, and 2 iterations of pizza as we tried to do that. Now we're much more efficient, and in some cases we can do this in 3 days. So I think the point Michael made is it has got to be a priority. It's about organizing your work, right? Measuring twice, cutting once, all those kinds of analogies. But it is equally as important in a small company as it is in a big company, and you're trying to drive as much efficiency and eliminate as much dysfunction as you possibly can as you do your work. And you want to make that work more satisfying to the people that are doing it, because there's more clarity around it, right? If in companies where that CEO is going to go do the work of that operational executive, you're going to attract a very mediocre operational executive, because nobody who's worth their salt is going to come into an environment where somebody else is diving into their work. They want to demonstrate their capability and prove their worth and make a contribution and all that kind of stuff. And if the founder or CEO is diving into that, you're not going to attract the best possible person in that job, and therefore the company's not going to be as good as it could be.
How do you think about mission and motivation? Because whenever, for lack of a better example, whenever I see somebody landing a rocket being caught by chopsticks, I'm like, what am I doing with my life? Is this is this meaningful, or am I going to Mars? Like, how do you think about meaning within a business context? How has that evolved for you? Because I get a lot of meaning through all these other activities, like helping veterans get jobs, helping disabled endurance athletes get wheelchairs, et cetera. But like, how do we get that similar level of meaning as like the fuel for consistent day-to-day excellence in business?
Well, you got to look at that company and what it is that company is looking, the impact that company is trying to make. And I would say in healthcare, it probably makes it a little easier for us. I've always found whatever role someone plays in the healthcare industry, they've always had this little something in them which is bigger than the specific task that I am developing this code, selling this product, whatever the case may be. They know that the impact of that is ultimately serving a patient and the ecosystem is serving that. So I think
like applied stem cell is doing gene editing,
yeah,
or
God,
Azurity making the dose form
yeah,
pharmaceuticals,
yeah.
and like it has a real impact.
Yeah, so I think in healthcare, I think there's an element of that, regardless of what role anybody's playing in those companies. I think that's the case. But when you bring a group of people together under the cause of the company, what it is that company is doing, I think that management team has to create that vision, that mission, right, in a way for which they then align to deliver on that. So I do think it's the company has to create that through the management team aligning on it, and then the individuals have to determine whether or not they fit within that or not. Do I have a passion for making dosage form products? Do I have a passion for recruiting patients faster? But I know that if that is done really well, the impact it has on the industry. But I think you do have to align on it. And candidly, if you're not passionate about it, then you should be spending your time somewhere else if you can find a way to be able to do that. I really do believe in the passion piece of it. For me personally, I'm not a technologist, but I worked in technology companies, right? I'm not a clinician, but I spent my entire career in healthcare. At the end of the day, I look back at my career. I'm not really sure what I brought to the table across any of these companies, but I've been in a whole bunch of them, and I think the passion and the enthusiasm and the commitment to the effort of those companies have I've served the company well, and I've been served by it well. But I do think ultimately, if you don't have passion and enthusiasm for something, life at the end of the day short. You're wasting your time, and you got to go find that. But back to the companies, you're sitting there with a capability and a market that you're trying to serve, and that team has got to align itself around what it is that company does. Southwest Airlines, it's all about getting the planes in the air. They don't make any money unless there's planes in the air. So everything that they do operationally is about how they get people in that plane fast and get 2 or 3 or 4 turns a day more out of that aircraft than their competitors do. So they've operationalized everything they do around getting that plane in the air, and everybody in that company has passion about their role of getting that plane back in the air and more turns, because that results in more profitability for the company because it's generating more revenue and get more leverage out of their asset base. So think about what they do. That crazy queuing as people get on. They were the first ones to have flight attendants clean the planes. Why would a flight attendant clean the plane? I'm not a custodian, right? Well, it's because we don't get paid unless we get a plane in the air. Well, I can get passionate about that, right? So you're solving problems because you're aligned as to what the mission and the objectives of the organization are. So the people have to fit into that. But if they do, and you create that commonality of vision and mission, how you want to work together, special things happen, which is why you can take, industries like trash pickup, and Wayne Huizinga completely transformed that with waste management. If you're a golfer, look at that tournament they support out in Arizona and how wildly successful. That's a company that picks up garbage. Is there technology in that? I'm sure there is. But and the same thing with used cars. So that you don't necessarily have to apply your energy and your enthusiasm of sending a rocket up and having it caught by a couple of chopsticks. So it's pretty amazing to watch. And a self-driving car. And I was just in San Francisco with all these driverless cabs out there. I mean, the technology that's happened in my lifetime is crazy, but there's still a lot of services businesses that you can apply the same enthusiasm to and make tremendous impacts as a result. You just got to find your place.
And I think what's interesting about people is, to your point, Vern, I think when people think about when they achieve success, if they're on a team and the team is battling through and the team believes in the cause, right? It almost doesn't matter what the end market is. It's we as human beings decided to accomplish a thing because we thought that accomplishing this thing was a good thing for other people. And we decided that it was important enough that we were going to put ourselves at risk and deal with the ups and downs to go accomplish this thing, because this thing was more important than any of our individual things. And it doesn't necessarily have to be the rocket to Mars, but the human act of finding something bigger than yourself, aligning with other people who believe in that, and sharing the ups and downs of that journey. I think that's kind of
Yep.
a common ingredient of the success of the businesses that make it. It's very rarely one person who just willed the thing to success through the ups and downs. Like, that makes for great podcasts and books, but that has not been my reality.
And it's foundational, which is why in our management system offsites we start with mission, vision, values, and develop the behaviors which are foundation to the culture. Because if the people sitting in that room can't get enthusiastic about that, you don't have what you just described, which is that group of people that are willing to go knock that wall down to solve that problem together. Because they're going to be those problems, and those walls are just going to be. So if you're sitting in that room and the CEO brought the mission, vision, values, and everybody sitting in that room doesn't buy into it, you are destined to fail, right?
When you look at all the management system installs that you have done, what are the common faults in the implementation? Maybe if you could segment it into phase 1 implementation and phase 2 and above. And I don't know what that means in terms of a timeline, but what are the common faults in the implementation of the management system?
CEO feels like it's a reporting system to the private equity firm and they don't own it. That's the number one fault. They don't bring a system of their own, and they feel like this is something they have to do to humor the private equity firm, and therefore they don't live it. They report on it. So as soon as someone says, "Hey, I got to do this for QHP," or we got to report on this at the end of the month, but they're not living the fundamentals of it. They're not breathing the fundamentals of it. They're not holding people accountable to this destined. And we have some of those. We have some of those situations in our portfolio, and those companies aren't as successful as the ones that do. I think that's probably number one. Number two is people tend to have difficulty being confident of making a decision in the moment, right? So you go to these monthly operating committee meetings, those are decision making meetings. They're not reporting meetings. The tracking sheets are going to show you how the company's performing, but the beauty of the management team is you now get to look at that data and go, what are we going to do next? Do we capitalize on something by seeing an opportunity and exercising some plans against it?
Why do you think that's because they're afraid of making a decision and owning the results, or because more often than not, they're consensus driven?
Yeah, well, I think it's probably different, but I think those are two contributing factors. I mean, it's a very uncomfortable thing to be accountable for something that's really important, right? And to stand in front of my peer group and go, I'm not getting it done, right? So that's a big thing, and people like to be successful, and it's hard for them to understand that red doesn't mean that you're a failure. It just means it's not going according to the plan. It might be that you're a failure, but oftentimes it's that we didn't make the right assumptions, or there's something that didn't happen the way that it should, and we're learning about the business and all those sorts of things. But it's really hard to truly have people rise to the level that they're comfortable in the accountability associated with that role. But they all say they want to be in it, right? I want to be that.
Well, and now you're talking about another dynamic with the founders who need to transition to a whole new chapter, and they've operated for the past 10 plus years being accountable to who?
Themselves.
Right? It's like, and it's interesting because we're even going through that. And Mike, I'm curious to hear kind of your psychology and working with a board on how you balance one extreme end of entrepreneurship with accountability to nobody except for yourself and your business partner, versus having a board and those trade-offs of the life that you want to live, which includes time, money, all these other things. So I'm just curious, Mike, how have you thought about it?
So how I think about it is there was a Harvard Business Review article written a long time ago. Do you want to be rich or do you want to be king? And what I find is a lot of founders say they want to be rich, but they really just want to be king. And for me, I think I love accountability. That's why discipline equals freedom. I think um, if I, as the leader of my firm, or I, as the CEO of a company that I run, don't want accountability, as somebody who's on the management team, that should be a huge red flag, right? Because like leadership starts at the top. And so if I'm not willing to be accountable up and down, so I have a board, but I'm also, if I've gone out and hired people, or I've bought a company and now I'm responsible for people's livelihoods, I'm accountable to the board and to my LPs and investors, but I'm also accountable to these people that I lead because I'm responsible for their livelihoods. And if I don't want to subject myself to a certain level of accountability, then one, how would I expect anybody else in the company to do so? But then two, how am I supposed to get on board with a mission or a vision that's bigger than just me, right? Because if I'm not accountable to anyone, then essentially what an employee is joined is a kingdom, not a company. I think the hard thing for people to understand on the front end, Vern, and you maybe you can chime in, is if people haven't been in a culture of accountability, even that CEO, they're not fully sold on the pace that you can move when everyone is aligned, there's accountability and there's clarity. For me, I've just seen, right, in 5 years, we went from 2 add-on acquisitions to 18. And if I look back in all of our like quarterly meetings through our EOS process, all of the things that got done because we had clarity and accountability. And I think back to the first couple of years where I didn't have clarity and accountability, I have to ask myself, why would I go back? For me personally. But then the second thing that I would
Yeah.
say is I think it also has to do with positioning. And what I enjoy doing is, and Jordan, you and I talked about this. Like the first entrepreneurial venture I started was a men's custom clothing business. Um, that me and another buddy from college, not Keith, but another buddy started. But the entire orientation of the business was, how can this business serve me? Right? I started this business. I want to do this. I want to make this money. And I think where my thinking has evolved is, one, if I think more expansive and I think about an opportunity that creates a bigger pie, and I can recruit the right people who share the same vision and values, and we all agree to be accountable, the scoreboard will take care of itself. So for me, part of my personal mission is I want to be involved in situations where there's an opportunity to make other people wildly successful. So so one of our values, and Jordan, you and I've talked about it, is, you know, for Lullwater, we are not the hero in the story, right? The company is, right? We look at ourselves as more of the Yoda. So working with Yodas who have more experience than ourselves, like Vern, which is why, I appreciate the opportunity to connect with him. But we're getting this information and this knowledge and this experience to help the company, not to boost our ego, because the result is we get to help a company achieve its potential, help some of those employees realize their potential, right? Help people who are somewhere that are not in an ideal situation find a home where they're aligned to the values of one of the companies that we work with, and we get to be along for the ride to see a result. And that moment where people look back in 5 years and go, "Holy crap, yeah, we sat down in that room and wrote these numbers on a whiteboard," but to see that we did that, like, yes, the fact that, people get to achieve success and some people get to retire, I'm not diminishing that, but there is something that is very fulfilling psychologically to be a part of that. So I would say, Jordan, each entrepreneur and founder, right, it's choose your own adventure. And I think where I've landed is the more I make it less about me, and I get to work with investors who support me in helping entrepreneurs realize their vision. If the cost of that is accountability, I'm happily pay that cost. But it's not the path for everyone, and that's why, when we started the conversation, right? What I love about the management system is the conversation you have to have with that founder in building alignment on the journey that we're going down.
Yeah.
It's not my place to tell a founder they're right or wrong. If they choose to not want to go down that journey, you started the business, you own the business, that's your prerogative. But if you decide to go down this journey, and there's a lot of great things that can happen along the journey, but very little of that can happen if we're not willing to be accountable to one another. That's just, in my mind, kind of the cost of admission. Vern, what do you think?
I just think about as you're having sharing those thoughts about the challenge of work-life balance, and in my view, work-life balance is whatever you want the work-life balance to be. It might be 95% bias one way and 95% bias the other way, but we're all in a different place regarding work-life balance. You can't define it for someone, but it's important to understand what's important to that individual. It goes back to those 5 principles of selecting someone to join your firm or selecting an opportunity. It's passion, it's contribution, it's culture, it's development, and it's compensation, right? So if the desire is, I want to be able to spend 3 months a year with my family in France and not touch my phone, it's very important to understand that. And by the way, find a way to make that happen for the person. Right. So if they're able to meet all the other requirements of being a part of the team, and we can make that happen for the person as a part of their development activity, I think that's wonderful. Right. So, but it's understanding that person and being able to attract the people to your team that, again, are quote unquote like-minded. We can't have everybody in the firm taking 95% of their time off and only contributing 5%. Probably not going to work, but kind of understanding that.
So maybe one of my concluding questions, and Vern, would love to hear kind of maybe some expanded concluding thoughts. My first question is for SMBs out there who want to implement the management system, and what's the most bite-sized thing that I can do this week, either by myself, with my co-founder, with my team. I hopefully can do an offsite for a week, maybe at the end of the quarter, but what can I do this weekend by myself to get the ball rolling with the management system in my small business that has less than 10 million in revenue?
Yeah. Where you are today and where you want to go. Do your from to chart. Go home and get a piece of paper out and put where you are on the left-hand side and put 5 years on the right-hand side and describe for 4 or 5 different dimensions where you are today versus where you want or aspire to be. I'd start with that. And maybe end with that, and then come back later and go, boy, if I'm going to go from 10 million to 20 million in revenue over 5 years, what's got to happen over the next 5 years to do that? And just kind of lay that framework out on a 8.5 and 11 sheet of paper. I think that's where you start any of these discussions, because if you
so don't start with the A3 of what's going wrong in the business.
Nothing going wrong. Nothing going wrong, right? You can't until you operationalize that plan. There's nothing to go A3. There's nothing to remediate. But that's where it all starts, right? Is you can have a job and do something, right? Keep yourself busy. But if you want to have something that is aspirational and motivational, you've got to paint a picture from where you are today to where you want to be. And where you want to be may be smaller, it may be bigger, it may be less, it may be more, but it is whatever it is. And it is that journey from where you are today to where you aspire to be, in however you define it, that creates that aspiration, generates that motivation, and creates some attractiveness so that you can bring talent to come along that journey. The rest of the management system is how you organize yourself to be able to make that real. But until you paint that picture of where you are today and where you want to go, all the other stuff's work. Right? It's work. And who wants to do work? right?
Well, and I think that this is important because founders or just the executive team needs to kind of put their own oxygen mask on first. And this is a way to do that, because sometime when you're just day in and day out, feel like you're just executing for year after year, you got to stop. You got to put your oxygen and then reset. And this is a way to reset, to get reamped about what you are doing.
So it goes back to, and I won't frame this correctly, but if you're having fun doing what you're doing, it's never work, right? That whole kind of mentality, and I guess that's what I'm expressing here is that if you're dreading or if you're doing something in your day that you view as work's not fun, right? Work's not fun. So nobody wants to do work. We want to have fun. So fun could be spending time with your kids in France. Fun could be playing golf, or fun could be working with a management team or working with an individual. Or whatever. What you want to do is the organization, your company, you want it to be fun for people to go spend time doing what they do really well, and creating an impact or creating a result or achieving an objective. You want that to be fun. Though it is work, you want the activity to be something that is actually fun because I'm passionate about it, right?
And I think it's fun and challenging equals engagement, which is therefore fulfillment. And maybe my formula is incorrect there. I did have a 2.79 GPA in college, so please don't trust my math here in the formula. But I think when I look at the team, the thing that really gets me excited when they did a really hard project together and they get to the end of that and they're like, yeah, you did that website. You did that logo. You did that kickoff meeting. You did that video. You flew down to Florida to go do that. Like, that's awesome. And was it stressful? Was it hard? Were you feeling lost sometimes? But guess what? We're at the end of that. And how much better are you as an athlete in your skills? Like that's maybe back to the mission of what I think I'm rediscovering is just seeing that team light up after they finally get through some painful training sessions in the gym, painful time on the court. I don't play basketball. I can't, but I'm going to go with this metaphor, but like that's fulfillment. That's mission.
And you really have solved it when they take all of those initiatives and perform them on their own without you having to tell them, because they've recognized an issue, they see a wall, whatever, but now they got the tool set to go break through it on their own. And they get to that destination of achievement, and you haven't had to intervene. You haven't had to lead them. You haven't had to go master them. You haven't had to do any of those interventions from a management standpoint because they're empowered to do it on their own. That's when the management system has traction, and that's when your company is flying, when those people have the tool set, recognize the challenges, take the action, solve the problem, meet the objective, and you're doing that across it. That's when you got that, you got plenty of time in your hands as a CEO or a founder or owner.
I love it. Guys, this has been awesome. I think it's a good place to maybe wrap up.
I've got
episode 1.